Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to silverradio.fm. Available online at housestreet.com, talkdigitalnetwork.com. Welcome to silverradio.fm. Podcasting in 0.99995. I'm Jim Goddard.
My guest is Ed Steer, founder of EdSteerGoldandSilver.com. He's also a director of GATA, the Gold Antitrust Action Committee. He's speaking to us from beautiful Merritt, British Columbia. Welcome back to the show, Ed.
Well, always glad to be on, Jim, and greetings to all your listeners as well.
SilverRadio.fm. First question, the big story in silver involves shorts. Can you tell us about that?
Well, it's very simple. There is no other story, as silver analyst Ted Butler says. He said there's only one story, and that's the fact that 8 traders, all of which are U.S. bullion banks or foreign bullion banks or investment houses, are short 51% of the entire open interest in the COMEX silver market. So when you've got 8 trading houses, all of them banks that are all investing the same way, they control the price. It's as simple as that. There's no other story. And in gold, it's just about as bad. I might as well throw that in there while we're talking. Is that these same 8 traders, they're not different, they're all the same. 8 traders, all banks, are short 47.2% of the entire COMEX futures market in gold. And this is off the latest commitment of traders report that came out an hour ago, so these numbers are right up to date. So if you got 8 traders on the short side that are all working in conjunction together to control the price, it doesn't matter what the other traders are doing. So the story is and will remain to be, what are the big 8 shorts going to do? But right now, they're so far in the hole on their contracts that they're trapped on the short side, and the only way for them to get out of that is to deliver into the contracts or cover and lose a bundle of money and drive the prices to the moon. So it's going to be interesting going forward.
If the silver price continues to rise and the shorts are forced to cover, how high could the price of silver go?
Well, it would be in the hundreds of dollars. I'm not talking 1 or 2 or 3. I'm talking big dollars. We could see a price spike well into the mid-hundreds. It wouldn't stay there very long, because once the last short had covered, then the price would come back down a bunch. But a short covering spike would be many hundreds of dollars higher than where it is right now. And whether that's going to happen, inevitably it must, unless the U.S. government decides to close the COMEX exchange in gold and silver and let the shorts out that way. But no, if things go the way they normally do, at some point, the shorts, big and small, are going to be forced to cover, and of course that's going to drive prices to the moon.
Could any of the big 8 silver shorts go out of business due to their silver short positions?
The first question you should be asking that to is Bear Stearns. Bear Stearns went out of business for exactly that reason. Now, the reason given way back in 2008 was because of the mortgage situation, all these mortgage-backed securities and things like that. But the fact of the matter is that they went out of business because the silver and gold prices were rising, and their margin call short position was, their margin calls were approaching $2 billion, according to Ted, because he calculated it. And it was their $2 billion short position that forced the Fed and the Treasury Department and the U.S. government to go cap in hand to Jamie Dimon over at J.P. Morgan and say, would you take this off our hands? And the reason they did that is because if they forced Bear Stearns into bankruptcy, the trustee would have had to go into the COMEX futures market and cover all these short positions as part of the bankruptcy proceedings. And then, of course, we would have had silver and gold prices to the moon way back then. So can a bank or any trader that's short silver or gold get themselves into trouble and go out of business? The answer is a resounding yes.
Would the big 8 silver shorts likely attempt to cover at the same time, or would a domino effect be more likely?
Oh, it's certainly going to be a domino effect, and it may not even be the big four. The big four traders are short the most. Okay, that would be, and I can name the banks. There's Citigroup, HSBC USA, Scotiabank. Let's see, there might be Dutch Bank, ABN AMRO in there. Australian Bank, Macquarie. Credit Suisse, banks like that. Those are the big four. And of course they have, fairly large amounts of money. And so does Goldman Sachs and Morgan Stanley. There'd be another two that would be short. Okay, but it's not the big ones that should be of concern. It's the smaller traders like who's ever number 6 or number 7 or number 8 or number 9 or number 10. Somebody down the food chain at a smaller firm that most people may have never heard of that are short, 8 or 9, 1,000 contracts in gold and 1,500 contracts in silver. The short position, as the price rises and the margin calls go up, start to affect the financial viability of the company. And the risk officer at the company or the chairman of the board looks at the traders and say, "What the hell are you doing? We're in this thing for like $350 million. And our company's net worth is only $500 million. We're at risk of going bankrupt." So it's going to be one of the smaller companies that rushes to cover, and of course, once one of the companies rushes to cover, that's going to drive the price up and force even more financial pressure on the remaining shorts. So this could get really ugly in a real hurry, but I think that it's going to start down the food chain someplace at some of the smaller shorts that are forced to cover if they wish to remain solvent as a company.
We'll have more with Ed Steer right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to silverradio.fm. Available online at howstreet.com, talkdigitalnetwork.com.
Welcome back. We're speaking with Ed Steer. Ed, how can you tell that the big 8 silver shorts are short silver, and by how many ounces?
No, I'll tell you what, that's the easiest thing in the world to calculate. I get on the phone with Ted Butler every week, and I can tell you right now how much they're short in silver. I did the calculation before we went on air, and the big 8 traders in silver are, like I said before, short 51% of the entire open interest, and they are short 77,463 COMEX contracts, which works out to 387 million ounces of silver. And they've been short this amount up or down up or down a little bit for the last year, and they'd have to drive silver prices down to like $13 or $12 before they get out whole. So it's easy to calculate these numbers. It's right in the Commitment of Traders reports, and I do it every week.
If the big 8 silver shorts don't cover their shorts when silver goes for a run, do the bigger silver players stand to make a lot of money?
Well, only if they're on the long side. I mean, if you're short and the price is going up, there's a limit. I mean, even say Citigroup or HSBC or Scotiabank, which is desperately trying to dump their Macata division. I mean, let's say silver goes to $50 or $75 just for fun. Some of the short traders are forced to cover. The smaller shorts are forced to cover and start driving the price higher. Well, according to Ted, right now each of the 4 big traders are short $1.4 billion in margin calls. That's their margin call position. They're in the hole to $1.4 billion. So, if silver went to, say, $50 or $75, you'd be looking at $5, $10, $20 billion margin calls. And I can tell you right now that would put Citigroup, HSBC, and all these other banks out of business in very short order. The shorts are going to get killed, and I don't think the CFTC will allow it once they get to that stage, because we saw what happened to Bear Stearns. You'd be looking at it happening to the three top banks in the U.S., Citigroup, HSBC, USA, the Scotia Bank, and maybe a couple of others. That won't be allowed to happen. And you'll notice one thing is that I've never mentioned the name J.P. Morgan. And the reason is that J.P. Morgan has exited stage left a long time ago. They are market neutral or net long in both gold and silver, and they've hung the other banks out to dry. So it's a given that the longs will do well, and the shorts are going to burn in hell. But that'll only happen. That will happen. But I'm sure the government may step in before that does happen.
What's the latest on the commitment of traders for silver?
Well, we're doing this an hour after the COT report came out on Friday, and silver analyst Ted Butler, whose name I mention all the time, it's work I follow closely. He's the only person really qualified to speak on this, and I talk to him every week. He was hoping that the deterioration, the increase in the commercial net short position in gold was only going to be 20 to 25,000 contracts, and no more than about 16,000 contracts in silver. And that's because the prices went up a lot last week. Gold was up, $70 or $80, and silver was up, I don't know how much it was a lot. And I looked at the numbers and I said, it could be really ugly. Well, we got the numbers out, and they were only a fraction as bad as Ted and I were expecting to be. The short position in gold was only, what's I got it written down here, 11,641 contracts versus Ted 2025. And in silver, the increase was only 4,200 contracts, and Ted was hoping no more than 16,000. So I can tell you right now, it was bullish beyond our imaginings. And of course, since the Tuesday cutoff, we've had a couple of engineered price declines in both gold and silver. So Ted and I both are of the opinion that whatever increase in the commercial net short position we've had since the Tuesday cutoff has all been eliminated, and we're right back to where we were last Friday. And I can tell you right now, it is very, very bullish.
We'll have more with Ed Steer right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
You're listening to SilverRadio.fm. Available online at HowStreet.com, TalkDigitalNetwork.com.
Welcome back. We're chatting with Ed Steer. Ed, does the SLV ETF have to constantly buy or sell physical silver?
Oh, sure. I mean, when the price is rising like that, they have to issue new shares, and as they issue new shares, they have to buy the physical silver to cover it. And of course, if the price is falling, then the shares get redeemed, and they're forced to sell the silver. And that's what they do, and that's what the ETF is all about. They're all, whether it be SLV or any of the other ETFs or mutual funds, they all operate on the same principle, that they buy silver when the price is going up and they sell silver when the price is going down. That's just the way they work. So the amount of silver going into SLV is just absolutely stunning. I haven't seen the numbers for today, but month to date in May, there's been 45 million ounces of silver added, of which 35 million has been added in the last 5 or 6 business days. It is just absolutely astronomical how much is going into SLV these days. But yeah, they buy and sell shares all the time, and right now there's silver going in there like it's incredible to watch every day.
Are there any issues with the physical delivery of silver?
No, there are none. There are people out there that say, well, they're having all kinds of trouble delivering. The fact of the matter is that the COMEX deliveries are proceeding on schedule, on time. There's absolutely no sign of any physical stress in the market as far as COMEX deliveries go. Now, if you're talking about physical availability of silver, well, that's an entirely different story. But as far as the COMEX futures market, deliveries in both gold and silver are proceeding normally.
I'm seeing ads on TV, $2 coins for $19.95. Is that a good deal?
$2 coins? What kind of $2 coins are you talking about?
I don't know, U.S. silver coins, whatever they are, and you get a $2 coin for $19.95.
Well, I'll tell you right now, the premiums being charged are absolutely astronomical, and the reason is very simple. There's just no physical. They cannot make the physical. They just cannot make the investment demand type of material available fast enough. I was in the retail trade for 4 years when I was in Edmonton, and the supply lines are very long and very thin, and it doesn't take much demand to clean them out. And once they're cleaned out, it's almost an impossibility for them to get filled up again when demand is this high. So these premiums are going to remain forever, and I don't expect the situation to improve anytime soon.
Are you seeing money move into silver?
It is just almost impossible to imagine how much money is moving into silver right now. Like I said, 44 million ounces has moved into SLV since May 1st. That's just in May. That doesn't include April or March or any other month. And they're going not into just SLV, they're going into every other mutual fund on planet Earth. I keep track of this on a daily basis, and it's just absolutely incredible how much is going in there. The only place it's coming out of, and I'll just add this right now while we're talking about it, is that there's continual withdrawals of silver from the COMEX futures market in New York. And this has been ongoing for a long time, so although it's going like mad into every other mutual fund and ETF, in the COMEX it has been going out probably to meet demand. So the money going into silver everywhere on planet Earth is just absolutely astronomical, and the same for gold.
Are you bullish on silver both short and long term?
You bet, and everybody else should be too. I mean, there's something going on out there right now. You know, Ted was talking about it, and I was talking about it. There's all this silver and gold on the move, especially gold going into the COMEX. Another 870,000 ounces went into the COMEX yesterday. And 1.8 million ounces for the week. And the silver going into the SLV and every other mutual fund and ETF out there, and the gold going in there, you know, we can't see it, but there's something happening out there, and I'm wildly bullish on silver, and everybody else should be too. I mean, I've been all in now in shares and in physical metal for the last 10 years, and I think our payday is about to come.
How can people find out more about your newsletter?
Well, they can just Google my name, Ed Steer, S-T-E-E-R. It's Ed Steer's Gold and Silver Digest. I publish it 5 days a week, and it's a subscription-based service, and the freight is $100 U.S. per year, which right now at the exchange rate is 139 Canadian.
And how can people find out more about your newsletter?
Just go and Google my name, Ed Steer, and you go there and you go to my homepage, and there's a sample column there. Just press on the sample column, and it'll come up, and it shows you the kind of content that I carry 5 days a week.
Ed, thank you so much for being on silverradio.fm.
Entirely my pleasure, Jim.
My guest has been Ed Steer, founder of EdSteerGoldandSilver.com. If you have any questions for Ed or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thank you for listening.
Comments made on silverradio.fm are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at HouseStreet.com, TalkDigitalNetwork.com. SilverRadio.fm is a production of House Street Media Incorporated. Executive producer is Tom Allen.